HIMS and her stock is up over 200% in the past year. And everybody's asking the same question, and that is HIMS stock still a buy in 2025, or are you buying at the top, or is it too expensive? So in this video, I'll break down whether the HIMS stock is the next high growth stock or just another overhyped health tech bubble. So let's get started. Hey everyone, welcome back to my channel once again. This is your friend Abhishek, but not a financial advisor. And without further ado, let's get straight to the point. So HIMS stock is up over 28 to 30% on this particular news. Now, I do know that this news was last week. It was released last week. Yeah, but on request, I got from my viewers that please make an updated video and valuation model on HIMS and hers. And is HIMS and hers still a buy? And that's what we are gonna do in this video to decide that, okay? So HIMS and hers health surges 24% in 1 week after Novo Nordisk partnership. Now guys, this is big. This is big. Why? Because now HIMS and hers get access to Novo Care. Now it's a win-win situation for both, but more for HIMS and hers. And we'll get onto that in a moment. But now the Americans can get access to Novo Care's pharmacy. Yeah, and now getting on to why it's a much bigger win for HIMS and hers, because now there is a less chance for HIMS and hers of getting sued by Eli Lilly, because we have seen that again and again that these big pharma companies have too much power. Yeah. And to wipe up the competition, it's much easier. But now, HIMS and hers has the protection of Novo Nordisk, another big healthcare giant in the Europe. So now, of course, with this collaboration, they have released a new $600 per month subscription plan, which I don't think is the bigger news because many people are talking about that. But in such an economy, when we are not sure, definitely people are not going to spend $600 on a subscription-based model. But this is just a normal, let's say, headwind. We will talk about other big events, what is happening with HIMS and hers, especially with their financials, and why it's still not expensive, to be honest, guys. And this is what we are doing in our Patrons community. We are averaging now up HIMS and hers. We are not putting a bulk amount in HIMS and hers because, of course, it's expensive compared to what it was 3 months, 4 months ago. Yeah, it is expensive respectively. It's not expensive as a company, as a stock, as a business, but it's expensive compared to what it was, what the price was, what the valuation was 2-3 months ago. So anyways, let's get on to the financials now. So this is the big news, the Novo Nordisk partnership, and this is the reason why the stock was up by 20 to 30%. So many of the viewers asked me what is my point of view on this. So this is the point of view that now HIMS and hers is under protection, and of course this partnership will bring much more benefits for HIMS and hers. So, and with this partnership, so this subscription based model might not be the biggest win, but what is a bigger win is the innovative weight management treatments which HIMS and hers provides. This is the bigger win for Novo Nordisk and HIMS and hers as well, because this collaboration will increase the subscriber growth. Yes, so the subscribers from Novo Nordisk will also come to HIMS and hers. Anyways, HIMS and hers alone without any collaboration or any partnership was going like hell, but now this is a bigger tailwind for HIMS and hers as well. Okay, so now let's get on to the financials, because financials are pretty juicy, which will give us an idea why HIMS and hers is still a buy in 2025 at these price levels. Okay, so the first important thing is the market share, guys. This is huge. So now until 2024, HIMS and hers has approximately 47.5% of the market share, and this shows that they do have high quality personalized solutions. So the other important part is there is GLP-1 weight loss drug, because this is one of the reasons why Novo Nordisk did a partnership. So as we can see, average weight change in pounds and initial weight loss, you can see the effect, guys. See the effect of this drug, and GLP-1 alone is coming with a revenue of $225 million. So this alone is bringing up a revenue of $225 million. So just imagine with this partnership, what more could happen. And now when I say juicy financials, this is juicy, guys. Recurring revenue. Recurring revenue is more than 90%, 45% subscriber growth, and 69% revenue growth year over year, and adjusted EBITDA from 6 to 12%. So this shows us that their top line growth is expanding, and we already saw that their market share is increasing. So this verifies that information as well. And with the expansion of margins, this is amazing, really. When the business is growing and the margins are expanding as well, then that's a really big growth story. And guys, this is unusual because when a business is growing, the margins are not supposed to expand, especially when the businesses are in a growth phase, because there's too much money going into the marketing, into the SG expenses. And another good thing is that with Novo Nordisk partnership, they wouldn't have to advertise as much as they are doing right now, because with Novo Nordisk partnership, they have an access to European market as well. Okay, so win-win, like I said. Anyways, moving on. Oh, when I see this slide, it's amazing, really. Okay, so revenue growth driven by expanding subscriber base, and this is huge, 95% year over year, and this is what we are talking about. So the subscriber base is increasing, and this might be a sign that okay, they can go on with the $600 per month subscription model, and this would be huge actually, but I'm not that sure. But of course, I mean, if they came up with a partnership, then they would have studied the market and the market conditions, so maybe it might work. If it works, then really good, really good. Now, a strong unit economics, guys, is quite important for a product. So we can see that if the product is making profit on unit economics basis, that means on per product. So we can see that in 1 year, their cumulative online gross profit has gone to $156, and this is amazing, guys. This is amazing, and this shows us that they are really in line with their capital allocation framework, and this is huge. And the scalability can be seen that it's improving, yeah, because we can see that the EBITDA margin is expanding, the earnings margin is expanding, and the adjusted EBITDA is now at 12%. So again, guys, this is really good, and 6% adjusted EBITDA margin expansion year over year is not small for such a company. And the most important thing for all the investors who are keen on profit-making businesses, strong free cash flow. So free cash flow, we can see $180 million, $221 million, $300 million from 2022 to 2024. And that's like 25 to 35% growth. Yeah, please remember this percentage, because this we will see in the valuation as well. And we will see that why HIMS and HERS is still a buy, and it's still not that expensive in 2025 and could be a good stock, high growth stock to buy in 2025. So the outlook for 2025 is 56 to 63% year over year growth. Now, many investors and many YouTubers are talking about that the growth is declining 87 to 94%, now coming down to 56 to 63%. My question to them is 56 to 60% growth a small growth? Is it small? Of course, the growth will decline eventually, but we have to see that is that growth. Forget about the comparison. In some cases, we have to forget about the comparison of the previous year growth. But we have to understand that that particular number, that particular growth rate for that particular year, is it good enough? 50 to 60% for a business to grow year over year is not a joke, guys. And especially in this market condition, when tariffs are all over the place, we don't know what's happening. The debt for US economy is increasing. It's in trillions of dollars. So we don't know what's happening, what's going to come. Is the recession on the verge? Then we should really not expect that a company should be growing more than 100% year over year, especially when the products are consumer based. So we have to, and health telecom companies do get a hit in such economies, yeah. But still, 50 to 60% growth rate is phenomenal, guys. It's phenomenal, yes. And see the adjusted EBITDA, they still are expecting 12 to 13% compared to 11 to 12%. So earnings are improving. That means the cost of production is decreasing, and this is what we have to consider. Yeah, cost of goods are decreasing, and capital expenditure might decrease in the future as well. So this is what we should be looking at. So revenue can be okay. At some moment, the business efficiency have to increase, because revenue can't grow at beyond a particular limit. There's only particular amount of market share they can acquire. But after that, the business efficiency comes into play, and we have to see the margins should expand after that. That is a business. That is a business, okay? Anyways, let's see the valuation. So here we can see that the price to free cash flow. So the average price to free cash flow has been at 23.9. Okay, the compound annual growth rate has been minus 49% because it went up to all over the place. So it was at 156. Now it's sitting at 31. Okay, so you might say that it's higher than the average, but But let's talk about what I showed you before, the free cash flow growth rate. 25 to 35% growth year over year for free cash flow, and the price to free cash flow multiple is just at 30. Do you guys think that this is reasonable for a business growing its revenue at 60% and price to free cash flow and free cash flow increasing by 30 to 35%? 31 price to free cash flow multiple is not hyped up, to be honest. Hyped up multiple would be 150. So I do think that HIMS and hers is actually trading at a reasonably low price to free cash flow multiple. Now, an average price to free cash flow multiple, what I would pay for a business would be around 20 to 25, but that would be like for a mature business like Amazon, Alphabet, Microsoft, Netflix. Yeah, that's it, 25 or max 30, but not more than that. But here we have a growth business. We have a high growth phase business. This business is in its high growth phase. So I would say this is a reasonable multiple. But okay, so here we are on the DCF model, and here I expect that the metric growth rate is 30%, what we saw already, okay? For the next 5 years. So for the next 5 years, I see that, okay, the metric growth rate is 10%. Now, shares outstanding. This is another red flag for me, for HIMS and hers, because they are diluting us like hell. This is a killer, but okay, let's expect that they will be diluting us after the cash flow becomes pretty much better. They will be diluting us at only 10% year over year rate. Now, the price ratio which I took is 40 and not 31, because I do believe that HIMS and hers could be the Amazon of the teledoc company, because their products are amazing. We can see the subscriber count is increasing, subscriber per product is increasing, and we can see the recurring revenue is increasing by 90%. That, guys, that's not a joke. So let's take still. This is actually, in my opinion, it's a reasonably low multiple, okay? So price ratio, I would take 40, and it still gives us a compound annual growth rate of 14% with a future stock price of $81, which in my opinion, really, in my opinion, is less. I do believe that they can do much better. Why? Okay, let me show you why I think that. Because analysts are expecting EPS of high $3 and low $3.18 and low almost $3. Okay, now we see the price to earnings ratio for this business now is at 70. So that could be one of the reasons why people are thinking it's quite expensive, but it is not. It is not. After the partnership, okay, it goes up and now it will come down. It will shrink, of course. The multiple should be around 50. I would be happy if the multiple comes down to 50, because earnings are still yet to come. We will see how the earnings will be. So now $3 and with 50 price to earnings multiple gives us a price target of $150. $150, guys. So I still think $81, which we saw in the DCF model, because DCF model I always try to be more conservative in. So that's it, guys. It could be a 3x, 5x from here. And that's why I do believe that this is not a high price or not overvalued at all. So this is what I wanted to show you guys. That is HIMS and hers stock a buy in 2025? In my opinion, yes, it is. It's not a financial advice. It's just my personal opinion. But please do your own research, and please, guys, like the channel, subscribe to the channel, and like the video. I really appreciate a thumbs up, and I'll see you in the next one. Until then, stay safe, stay healthy, and ciao.